Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastep Jr.
Hello and welcome back to the Ask Ralph Show. My name is Ralph Eastep Jr. I'm an accountant here in Delaware, where our office is in Middletown, Delaware. You can find out more about me or about my practice by going simply to AskRalph.com. Well, today I want to talk about something that is important to a small segment of the population, but somebody that I want to draw attention to. And I want to start by saying, first of all, that here at the Ask Ralph Show and at our firm, we definitely respect America's military veterans. So I want to take a few minutes to talk about a huge benefit for veterans, and that's VA home loans. So let's start by talking about what is a VA home loan. Well, home buyers who are considering a VA loan but have questions have come to the right place if you're going to listen to me. And see, that's the thing, like applying for a mortgage can be complicated. Then you add this VA process in the middle to it and it can become overwhelming. But see, you need to know some basics. So let's talk about some common home buyer questions they ask about VA loans. And those are things such as, what benefits does a VA offer? Who can get a VA loan? What are the VA loan requirements? What are the benefits of VA loan? And here's the deal. This is the truth. For eligible folks, VA loans can be the key to home ownership. In 2018, 610,512 VA loans were made with an average loan amount of $264,197. What does that mean? It means in total, the VA was responsible for $161.3 billion in mortgages last year. So let's go back to the question. What is a VA loan? A VA loan is a mortgage that is made by private lenders but partially backed by the Department of Veterans Affairs. There's no limits on the amount you can borrow, but there are limits on how much the VA will guarantee. So, one of the benefits of VA loans, also known as Veterans Affairs mortgages, is they consistently offer lower rates than traditional bank financing. Well, that's because the Veterans Affairs Administration, or the U.S. government, is backing that loan up. So for a lender, they can look at that and say, oh, okay, cool. So if this person decides not to pay, they've got some redress. They can get that money back from the government. The main draw of a VA mortgage is that they make it easier to get financing by offering no down payment loans and more lenient credit and income requirements than conventional mortgages. So what I'm saying here is, that dreaded 5% down or 3% down or 10% down goes away. So you get the benefit. Once you have your certificate of eligibility, or what they call the COE, you can apply for a VA home loan. So let's talk about how do you make that happen. The VA guarantees a portion of your mortgage via entitlements. There are two types of entitlements offered to eligible veterans. That's the basic entitlement and the bonus entitlement. The basic entitlement is $36,000 or 25% of the total mortgage if you default. You would get the lesser amount of the two. Generally, lenders will loan 4 times this amount, so you can think of it basic entitlement as a 25% down payment on a $144,000 home. But you don't have to use that whole entitlement. As the home values continue to pick up, most home buyers are faced with the price tags in excess of $144,000, or the max loan amount for basic entitlement. This is where the bonus entitlement kicks in. So we talked about the basic, now we got the bonus. In 2018, the median sales price for a home hovered around $315,000 for most VA buyers. That's why this bonus entitlement is necessary. This is also called the second tier entitlement. The VA uses a National Conventional Financing Conforming Loan Limit set by the the Federal Housing Finance Agency, or the FHFA, to establish the bonus entitlement amount. The FHFA boosted loan limits in 2019 to $484,350. In high-priced areas, the ceiling is higher at $726,525, or 150% of that $484,350. Homebuyers can check loan limits in their area, so it does depend on where you are. So the VA usually covers 25% of your loan amount, so that eligible borrowers will get 25% of that $484,350, which is $121,087. Then what happens, the VA subtracts the basic entitlement, which is $36,000 from the $121,087, leaving borrowers with a total of $85,000 in bonus entitlement money. What does all this mean to you? Keep in mind, lenders will generally loan VA borrowers 4 times the amount of the entitlement. This means you would multiply $85,087 by 4, which gets you $340,350. Finally, you would add the $144,000 VA loan limit from your basic entitlement to the $340,350 sum, which gives you a total limit of $484,350, which takes us right to the National Conforming Loan Limit. So for homeowners in high-cost states, the entitlement amount is larger. Continues with higher limits. The VA will guarantee 25% or a maximum of $726,525. It's also possible to use your entitlement more than one time. This depends on several factors, such as your entitlement. You don't have to. So what are those requirements? The goal of the VA loan is to help veterans become homeowners no matter where they live. So don't let a costly housing market or a prior VA loan deter you from exploring this option. So depending upon where you live, don't think like, well, I can only buy a home for $484,000. So what are the requirements? Most members of the regular military, veterans, reservists, and National Guard are eligible to apply for a VA loan. Spouses of military members who died while on active duty or as a result of service-connected disability also may apply. Active duty military personnel generally qualify after about 6 months of service. Reservists and members of the National Guard must wait 6 years to apply. But if they are called to active duty before that, they gain eligibility after 181 days of service. So you see there are significant or specific requirements. So you may qualify if you served 90 consecutive days of active service during wartime or served 181 days of active service during peacetime. If you've been an active member of the National Guard or reserve for 6 years or more. If you're married to a service member who died in the line of duty or as a result of service-related disability. Now here's the important part. It's important to note that getting a COE doesn't mean veterans qualify for a mortgage. There are two separate processes. Once you qualify for the COE, you can shop for a home loan. However, you still have to meet lender requirements, which includes things in the standard things like income verification, credit scores, and debt-to-income ratios. Now, one of the things a lot of people talk about is, do VA loans require PMI? A VA loan doesn't require PMI insurance or private mortgage insurance. Federal Housing Administration, FHA loans, and conventional loans with less than 20% down require PMI. So this benefit translates into significantly monthly savings for VA borrowers. For instance, and here's a great example, a borrower who makes a 3.5% down payment on a $200,000 FHA insured mortgage would pay $100 a month for mortgage insurance alone. That's $100 a month. So the VA helps you that. Now, there's another thing they talk about in VA loans. You might have heard this term called a VA funding fee. So although the costs of getting a VA loan are generally lower than other types of low down payment mortgage, they still carry a one-time funding fee that varies depending upon the amount of the down payment and military category. This fee helps offset taxpayers' costs since there is no PMI on down payment. So how does this work? Well, a borrower in the armed forces getting a VA loan for the first time with no money down would pay a fee of 2.15% of the loan amount. This fee is reduced to 1.25% of the loan amount if the borrower makes a down payment of 10% or more. So you can still save if you make a down payment. Reservist and National Guard members normally pay about 1/4 percentage point more in fees than do active duty members. Those using the VA program for the second time without a down payment would pay 3.3% of the total tax amount. So since I'm a tax guy, this VA funding fee is a deductible expense in the year that you do it. Now, there's a lot of nuances to the VA. I just wanted to give you a little taste of that today. There's specific occupancy requirements and loan underwriting requirements. All those depend on the particular lender. So if you want more information, you can go right to the Veterans Affairs website and you can learn more about VA loans and then talk to your mortgage broker about it because a lot of people don't talk about it. So I hope this was helpful talking about VA loans.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.